For a long time, India was called the closest US partner in Asia. The country expected to become the main counterweight to China and a pillar of American influence in the region, but the last 2 years have radically changed the logic of this relationship. And now, New Delhi, according to such authoritative outlets as Financial Times and The Economic Times, has effectively launched a quiet and extremely painful for Washington financial revolution against the dollar. It all began when US President Donald Trump, confident in the absolute strength of the American currency, decided to use the dollar as a weapon, introducing high tariffs and sanctions against India under the pretext of protecting the US market, undermining New Delhi's trust in Washington. Prime Minister Narendra Modi, who just a few years ago actively promoted closer ties with the US and signed weapons agreements, suddenly found himself in a situation where a traditional ally was not helping India develop, but instead blocking the growth of its economy. Loud debates began within India, and leading think tanks such as Observer Research Foundation and economic advisors of the caliber of Raghuram Rajan stated openly that the era of a unipolar world was ending, meaning the country had to stop depending on the dollar. According to Bloomberg and sources inside the Indian Finance Ministry, the Modi government approved a new directive requiring all strategically important international contracts in oil, gas, IT services, and defense to be concluded in rupees as a priority rather than in US dollars, and payments with Russian, Middle Eastern, African, and South American partners are being shifted to bilateral currency corridors. This means India no longer has to buy dollars to purchase energy or technology. And it was precisely the constant global demand for the dollar, as American experts themselves admitted, that supported US financial power for the past 80 years. At the same time, India began rapidly reducing its holdings of US debt. According to the US Treasury, in just the past months, India's holdings fell to the lowest level in a decade. And as Reuters notes, these funds are going into gold and into increased foreign exchange reserves, where the share of the US currency is gradually shrinking, while the share of gold and the currencies of emerging economies is growing. And this is not all. India began actively promoting the idea of the rupee as the currency of the global south, offering to use it in settlements for African and Southeast Asian countries, long pressured by the American financial system. As the Wall Street Journal writes, Washington was shocked when in G20 meeting rooms, Indian officials stated openly, "We no longer want to be dependent on the dollar, which can be frozen by a political decision at any moment." According to anonymous sources in the Indian Foreign Ministry, this position emerged from an internal reassessment of risks. After all, the US has repeatedly shown the world that it can cut any country off from the dollar if it serves the interests of the White House. India, with the world's largest population, a powerful economy, and massive investment programs, does not intend to allow external powers to control its future. And at some point, Washington realized that New Delhi was doing exactly what American economists fear most, beginning to erode the foundation of the dollar system from within the global trade network. IMF experts already warn that if the trend continues, the dollar's share in global reserves may for the first time fall below 50%, which would become a psychological point of no return. Prime Minister Modi, according to Indian insiders, directly told his cabinet, "We must ensure that no foreign country can stop India's economic development." He understands that rejecting the dollar is not just about economics. It is about political sovereignty, independence from the US, which has turned the financial system into a tool of global pressure. For America, the blow is especially painful because India is not a small player, but a country that in the coming years will enter the top 3 largest economies in the world, surpassing Japan and Germany, and its population is already the largest on Earth. If such a giant stops needing the dollar, others will quickly want to follow the same path. Already Saudi Arabia is signing oil deals without the dollar. Turkey, Indonesia, and Brazil are expanding settlements in national currencies, and BRICS is creating an alternative international payment infrastructure. But it is India's position that has become a troubling signal for the US that cannot be ignored. The closest partner on which Washington relied suddenly stopped playing by American rules. And hidden in this is the main fear of the Pentagon and the US Treasury, If other allies follow India, the dollar will lose its status as the world's reserve currency, which would automatically deprive the US of its main advantage, the ability to live on credit at the expense of others. According to analysts at Bank of America, the dollar system rests on trust, and that trust is rapidly eroding in an era when countries see that they can be punished not with sanctions on oil or technology, but simply by being cut off from dollar liquidity. That is why India's steps are called the beginning of the era of financial multipolarity. The world is ceasing to be American, and even in the US, this is now acknowledged. Foreign Affairs wrote in its latest issue, if India completely breaks its dollar dependence, the domino effect will become irreversible. Panic is already growing within the American establishment, and congressional expert groups are asking whether the US can physically stop the dollar from collapsing if giant countries like India no longer want to play the old game. The more India strengthens itself, signing currency agreements with the UAE, Saudi Arabia, Russia, Egypt, and even Japan, the louder becomes the question that until recently seemed impossible. What if America can no longer dictate the rules of global finance? India has begun what analysts call the second wave of de-dollarization, and this process can no longer be stopped. The world is entering a new era where power is defined not by the number of aircraft carriers, but by the ability to trade and invest without US permission. And if India continues at the same pace, then in the coming decades the dollar may lose its status as the planet's main currency, and with it the foundation of American leadership, built on the idea that the dollar is eternal, will collapse. But now, according to the same American insiders, this confidence is cracking. The US financial empire, for the first time in 80 years, feels the ground slipping from under its feet. And it is India that has become the force that shattered the illusion of American invulnerability. And now, more and more analysts agree that India has already passed the point of no return, and even if Washington tries to bring it back into its sphere of influence, it will be nearly impossible because Modi is building a new economic architecture where the US dollar is only one tool, no longer the foundation of the world. And in this system, New Delhi will play a key role, setting the rules for the global South, which has grown tired of submitting to the northern financial elite. According to CNBC, Pentagon internal reports already use the term Modi effect to describe the acceleration of de-dollarization, simply because such a large country has for the first time openly questioned the necessity of the dollar in international trade. And Western bankers acknowledge that if India starts selling more oil, gas, and electricity, using its own logistics corridors, and simultaneously demands payment in rupees, investors will reassess currency risks. A new center of financial gravity will emerge in global markets, and the United States will have to compete not only with China, but also with India for influence over the global economy. And this is exactly the future the White House wanted to avoid at all costs, but it is already arriving, silent but destructive, where the collapse of the dollar does not appear as a sudden catastrophe, but becomes the inevitable outcome of decades of American policy arrogance.